thought we could chat a little bit about your role as an operating partner and value creation, and really a bit about the evolving role of value creation in the private equity context and within the private equity enterprise. I think from the perspective that I come from as the service provider, I think we hear a lot about the rationale for how the role itself came into being such a prominent part of I think the value, the thesis here of investing, but it's still, I think, a little opaque, if you will, about how it is that you in your organization deploy the resource, the specific things that you've kind of working through or working on, and how that's evolved as you've been part of the organization, Permira, for a while now. So
yeah, any like particular aspects you want me to comment on?
Well, we could. I think the first piece of it, maybe we can talk a little bit about, is in the portfolio itself. So you have an active entity in your an active investment in the portfolio. How are you specifically getting involved in that?
Yeah.
I'd say first, and then second, has that evolved? What I'm kind of curious is that has now evolved to things that you would otherwise do to help increase value of the portfolio.
Yeah.
Is that now kind of translating itself into the underwriting process and getting involved in the actual and front end investing?
Great. So that's helpful.
Yeah.
So our approach at Permira, and like if there's anything I've learned, in my previous life as a consultant, I served, much like you do, private equity firms and their portfolio companies. So I kind of got to see many different models, and I've now working for Permira and kind of networking within the industry. If there's anything that's true, it's like there's as many different approaches as there are private equity firms, right? So the way that we tend to think about it, right? So on the portfolio side, I think perhaps our first principle is that we want to have what we call sort of a pull model versus a push model, right? So we tend to invest in what we see as kind of very high quality assets that tend, we're a growth focused firm, kind of growth at scale. So relatively large size companies in the spectrum of private equity deals, but also companies that are highly profitable and growing relatively quickly. Whether that's compared to the peer set or however you think about that. And so what that means is we're backing. We back what we tend to see as very high quality management teams. We do a lot of deals with sort of founder led businesses, and so in order to be effective, right, we've got to build a relationship with that management team that's sort of trusted, where they see us as a helpful advisor that can kind of get them ahead quickly on specific topics where we bring a lot of value and expertise, and not sort of getting in their way and kind of overcomplicating things and micromanaging them, right? That's like the sort of overarching principle of the way that we interact. We tend to take a more sort of functional expert approach, right? So some firms will tend to be more generalist, right? They'll hire, people that will be assigned to portfolio companies and kind of cover every function within that, business. We tend to hire people who we see as having functional spike, right? So that could be, in my case, it's sort of go-to-market, growth, sales, marketing, pricing, any commercial topic. We have a whole team of people that are focused on AI and advanced analytics and automation. We have people that are kind of focused on sort of finance and topics around efficiency and cost and collections and those kinds of topics, cash flow. And so that tends to lend itself well to our desire for a pull model, because generally we find that CEOs and management teams prefer to bring someone in that has a very specific kind of deep level of expertise that they can ask to kind of execute a project or address one specific challenge that they have, versus we don't get a lot of CEOs who are saying, can you please bring someone in that can touch every topic in my business, right? That's sort of the way that we think about interacting with our management teams.
I assume they must feel in some respects that they must have a fastball themselves. So they must say, hey, listen, we got this covered.
That's right.
And
That's
so,
right.
But here's some things that we need.
Yes, and that's
Yeah.
that's the way our value creation plans tend to be structured, right? We tend to be very kind of specific about functional areas, and during diligence, we try to collaborate with the management team to sort of almost co-author that value creation plan so that it's sort of wired post-close of the deal,
Yeah.
versus needing to kind of start fresh and start from scratch and kind of build that once we already own the business.
Do you find that you end up that becomes part of the underwriting thesis itself, achieving whatever those opportunities may be, growth of those opportunities? It sounds like you do more on the kind of customer revenue side, or
Yes.
Yeah,
That's right. I mean, we do underwrite some sort of reasonable portion of the value creation plan as we think about the deal, right? And finding the right balance of, which are the opportunities that we have a deep experience in, right? Ideally, we have done deals before where we've executed that specific value creation playbook, and so we can rely upon our ability to execute that, post-close. Like that's kind of where we try to live in terms of what we actually underwrite.
Yeah. Do you ever get in situations where you get a management team that's like, we got all this, thanks, but no thanks, or?
At times we do, right? And frankly, we have some very successful investments where that's the case. And I think that's just part of, investing in really high quality businesses and backing great management teams, right? Is like, if that's the outcome and everything goes well, then, that's wonderful, right? And we'll interact at the board level and kind of be a strategic sparring partner and let the management team do their thing. I think that's frankly fine by us.
Yeah. It's I think because in a current situation with a client of mine where we actually have a very, very strong CEO that is now in place, to the point where even a basic function like an audit he gets, and he wants you to know that I've got this covered. We've got everything that we need. Your budget should be lower than what you're telling me because I certainly have it under control. So it's
I think you can sort of, again, we tend to build relationships with the leadership of the businesses we invest in kind of for multiple years before we do the deal. Like that's our typical deal archetype, right? And so ideally, again, where it works really well, we've been talking to them for a long time about the challenges that they face in their business and how we can be a value-added partner to them so that you don't end up in that situation, post-close. I do personally think that is a trap that some private equity CEOs fall into, where they spend a lot of their time at the board level trying to prove that everything is great. I think that that's frankly a trap, right? I think what do private equity boards want? The way that I would characterize it from the management team, right? The way that I would characterize it is I'm eager to see the management team come to the board meeting and demonstrate that they understand exactly where all the problems are, because there are always problems, right? Like even in the best performing businesses, they're grappling with some issue or some strategic problem that's on the horizon, right? Or how do we sustain this level of growth, or this level of pricing increase, or whatever it may be over time. So there's always some sort of challenge or problem or issue to be dealt with. I think the best CEOs tend to avoid that trap and come to the board very proactively, demonstrating that they know where those issues are and that they have a plan to address them. And then they're asking the board for their kind of experience-based, both strategic and at times sometimes also operational and tactical input on those challenges, right? That's when it works really, really well.
Right.
Yeah.
Do you see it the other way? There are times when you're feeling like, I need to help with some prioritization here. Not everything can be a problem. Like there has to be these are, here's my expertise as to where I should be spending my time.
I feel like it's frustrating, but I kind of relearn that, that like major learning over and over again. And I think we spend a lot of our time at the board level with our companies, challenging the management team, both kind of at the CEO level and also at the kind of C level over specific functions. Have we prioritized sufficiently, right? And I think on average, my experience is that the default setting of most myself, frankly, and value creation teams and leadership teams, we often sort of we often sort of try to fool ourselves that we can do 5 things or 7 things when really we can maybe do 3 or 2 well.
Yeah.
And generally speaking, I've found that getting an A on 2 things is way better than getting a C on 5 things, right? So that, again, it's a little bit mom and apple pie and obvious, but it is a mistake that I just sort of see, I frankly have made over and over again. And I think we spend a lot of our time, I know we spend a lot of time at the board level just pushing on, do we really need to do all these things? It's hard though, right? I mean, it's like, I'm sure you see it in your business, right? It's hard to just accept that, hey, there's this whole area of the business that I'm just going to have to let it sit there and exist how it is and accept that.
Yeah.
So I can go do these 2 other, that's the tough thing. It's like, I know there's a problem over there and I want to address it.
Yeah.
And so with the best of intentions, you end up with a plan that has, 5 initiatives or 7 initiatives. And
yeah. It's interesting because even in our business, what we sometimes see is, okay, there are these competing priorities and there's 2 or 3. And we, as a provider of a particular consulting service, may be really, really good at something that's in this bucket over here, but it's not quite the real driving force or priority of what the organization is under. So you're like, well, I could really be helpful to you right here, but I get it. That's not really where you want to be spending your time. It's important to you, but not that important to be spending that time. And so we kind of get, have to take a step back in that situation, recognizing exactly that, hey, you can't have 25 competing priorities. It's just too much.
Yeah, agreed.
It's just too much. Maybe that's a good way of asking, how is it that you work in situations where you have something comes up, there's something to be had here where we have some performance improvement or some expansion of business, et cetera. How are you kind of divvying up responsibilities of how that plan comes together, from anything from design to, feasibility to, expectations? Is that something do you have a team that you work with internally? Is it advisors? Is it, the company and company personnel? How do you?
Yeah, it's a great question. I think like most value creation teams, we have a relatively, lean team, right? I think we have around 25 people right now in our value creation team. We own 79, or we invest in 79 businesses. A portion of that is kind of control buyout investing. A portion of that is minority growth investing. So the level of value creation involvement and kind of board involvement is different across those. But there's more work that, to go around than we can all do ourselves, right? And so we do a few things, right? We have a whole team of senior advisors, right? I think we have 20 plus senior advisors across our portfolio, who are generally kind of former CEOs and C-level executives with, again, some sort of industry or functional or both sort of spikes.
One of our former.
What's that?
One of our former.
Yes, yeah, that's right. Yep. Kelly is one of our esteemed senior advisors, and has been great to work with in our services team. So that group expands the size of our team. We have a growing group of what we call executives in residence. So they tend to be a little bit kind of earlier career on average than the senior advisors, people that are kind of closer to having been in that C-level seat, or at times even sort of were kind of hired out of that C-level seat. Mm-hmm. And they tend to work more hands-on, more operational with our C-level leaders. And so former CMOs working with, the CMOs in the portfolio, CROs, COOs, et cetera, right? So that is kind of a growing group that also provides us with, kind of leverages our internal value creation team. And then, each member of our team is responsible for building kind of a set of advisors, who we see as kind of the foremost experts in whatever their field is, functionally, and then also sort of horizontally in terms of kind of operations, as well as sort of AI, advanced analytics, automation.
Yeah.
And so again, we'll bring them in when there's heavy lifting, to be done. And then obviously our main point of collaboration is the management teams that we build, right? So when you put all that together, right, it's a relatively large set of resources. And now I've like lost the thread on your original question. What was
No, that's exactly like how is that ecosystem? How does that work? With between yourself, the value creation, the support partners that you do have, in management.
I think it's really for us again. It's a functional kind of expert spike model, right? And so when we build the value creation team, if it has a large go-to-market portion, then I might work, within or lead that value creation effort.
Yeah.
If it doesn't, then I'm likely not to be there, right? And my kind of operations and finance and AI colleagues, the same thing applies, right?
Yeah.
And so we're generally looking for getting the right kind of functional expertise with sort of a, quarterback kind of PMO layer. We have a monitoring team that is deal professionals and value creation professionals together. And then we're often hiring some level of kind of value creation resources. Could be a chief transformation officer, it could be a PMO leader within the business.
Yeah.
And then there's generally a team that is both Permira and management team members that are working that value creation plan. And again, we have a pull model, so we're very flexible in terms of structure. We are not kind of rigid in the way that this needs to be set up.
Yeah.
We try to be pragmatic and set it up in a way that best fits the actual work to be done and the style of the management team and the resources that we've applied to it.
Yeah. You as you are in, I guess we'd say, a cost of the business of investing, and you're deploying all these other costs associated with it. And there's arguably must be some direct and proximate benefit that you could derive from the business. How does your organization kind of think about recognizing and rewarding what you guys are doing, in connection with the idea here that really if you're predominantly a performance-based model, everybody wins when everything goes well and the value increases of the portfolio. But
it's a good question. I think we tend to, when we build our value creation plans, and as I mentioned before, we try to be very specific about what the initiative. It's not kind of like generally address this function, right? It's like, what specifically are we going to address within this function, within whatever part of the business, and then we hold ourselves accountable to a specific set of KPIs, right? So what's the right way to measure both from a leading indicator perspective and then also kind of rear view mirror the effectiveness of that initiative. And then we try to make sure that the data architecture and reporting is in place up front to be able to do that throughout the life of the initiative. And then, ultimately it's generally either something's becoming more efficient or something is becoming more, productive. And we're holding ourselves accountable to measuring that and being specific about it. And so that, inevitably what happens is some of the initiatives work out really well right away. Some of them struggle. And so then you're measuring, and so you're understanding where you're struggling. You're ideally on top of leading indicators so you know why it's not working, and then you can adjust and iterate over time. That's when it works well.
Right. Interesting. Last question. How do you see your role and the role of kind of this value creation, if you will, within the private equity, private capital? How do you see that changing with AI? Is AI just now it's a tool, and or is it really? Do you see I guess something that's much more transformational? Or
I think it's both, right? So for our business, right, we over the last few years have worked to change the way that we approach due diligence to adjust for the risks and opportunities presented by AI. We've worked to change the way that we approach value creation. We have tried to be flexible and specific across the portfolio to guide and at times push our management teams to make sure that they are being thoughtful about what AI means for their business, both in terms of their product and their market, right? So we have, we've invested in a business called Zendesk, which is, pretty well known. And in their case, right, agentic AI, right? So a lot of what Zendesk does is helping companies, provide customer service and support, and also interact with, their employees or their customers, right? So agentic AI is sort of at the forefront of their product. And so Zendesk has had to be extremely forefronted about,
Right.
front-footed, I should say, about
Yeah.
building, that into their product, right? And we have other businesses where they're in slower moving markets, where had they really run at AI hard the way that Zendesk has done quite successfully, they would have probably lit a lot of money on fire, right?
Right.
Because they would have, have been building technology, and implementing technology that now is kind of 3 years old and the market hasn't moved and it wasn't necessary. So we tried to be kind of really specific about what makes sense, especially when we're talking about things that impact customers, like, product changes, right? We've tried to make sure that each company is being thoughtful about how can AI improve its internal processes, right? And what's the kind of highest priority set of initiatives
It goes back to
there,
this,
right?
prioritization again. Yeah.
Yeah. But again, it's just that all needs to be quite specific to the business. I think the part that I perhaps am most excited about is there's just so much hype. Like that's been my experience, right? A lot of the vendors that we work with, or the businesses that we're interacting with, there's a lot of desire to talk about AI, and a lot of that's real, but a lot of it's hype. And so we have tried to push ourselves to be kind of very focused on what are the playbookable use cases and kind of killer apps that really are proven can really make a difference within, it could be, just to be really specific, right? So making sure using kind of data and advanced analytics and predictive modeling to focus sales reps on the right customers, right? Like that's a big use case that we've kind of rolled out. Like that's something you can do across the portfolio, right? So how do we turn kind of this hype and momentum and excitement into specific use cases that can be applied to multiple portfolio companies? So once you've done it and it's kind of proven, it just becomes a lot easier to do it over and over again. That's probably the part of it that I'm most excited about, and starting to see kind of really interesting results where you're applying something that you've proven somewhere to other situations.
Yeah. Interesting.